Happy Tuesday, everybody. Jim Malone here with Dallas Trading Floor. Well, the market has snapped back, but we're still in this correction. And I've been opening up some. Positions, but it's just it's one of those things that has been kind of a weird day. I definitely moved back into the Qs. Interestingly enough, it looks as if Apple has, Apple is at an all-time high. So let's get to the let's get into the slides here. By the way, everybody out there, it is Pearl Harbor Day, very historic day. Today, it was 80 years ago today, believe it or not, on December 7th, 1941. So a long time ago today, but this is definitely a very historic day. Just wanted to put that up there. It's the Pearl Harbor Remembrance Day. So without further ado, let's get into it. Here's what's happening on the major markets. The Dow is up, the S&P is up, the Nasdaq is up significantly, and the Russell 2000 is up. So that is looking very good. Who knows? I mean, we may have been a little bit too premature to go to a correction, but the indexes were pointing downwards. We're still not out of the woods. I basically on Friday went to all cash, and then I've been just barely putting my toe back in the water and just trying to get some traction here, trying to get some exposure. I am mostly in cash, but that's kind of the way that's going away. There's a big drop today in volatility. This is a chart of the VIX. As you can see, it's pulled way down here, which is great because the volatility was, this is the part of the reason there was a call for the market in correction, is that the volatility is spiked up. Typically, when the volatility spikes up, that's when we see a change in overall direction in the market. And so right now, the volatility is dropping, which is a good thing. I'm trying to put on more positions. Don't have a whole lot in there. Don't have a whole lot to put on, but just kind of want to show you sort of where I'm at in terms of things. I did buy a stock today, interestingly enough. It is an unusual stock. It's called Cheniere Energy. The symbol on it is LNG. Of course, that's liquefied natural gas for those who are in the know. And basically what this company does is it is a U.S. based it's a U.S. based liquefier of natural gas, and they have a plant in Sabine Pass, Louisiana, and they're also building one in Corpus Christi, Texas. And they take the gas, they compress it, and they lower the temperature on it, and then it's shipped in the LNG carriers all over the world. And hopefully, there's a lot of demand for this both in the Far East as well as in Europe. And I do expect that we will see probably a price spike in natural gas. We will probably see a price spike in natural gas. Let's look at the live chart. I just want to take a look at this LNG and see if there's anything after it. And the reason I bought it really was that it had moved above this reversal line. I kind of want to show it to you. There we go. Okay, so basically the situation here with Cheniere was that I had this reversal line drawn here, and then it's in this consolidation pattern, and then it kind of peaked its little head above there. That's when I bought the full position, basically at 106.94. Set my stop loss here, basically at 103.50. That's basically the 40-day line here. Just kind of wanted to show you that. And so hopefully, it peaked its head above. It's pulled back a little bit. It's up a little bit after hours. I do think that there's some strong potential buying here. We did have an outside day today, and it has been trending higher. So we'll see, if the timing was right on this one. That's the so key thing. It's got a checklist of 78, not necessarily a great checklist. And on the technicals, basically, it's up about 80% for the year to date. And of course, we're almost at the end of the year, but it's up about a little over 8% on the quarterly. Weekly, it's up about 2%. So hopefully, this will continue moving. It's got a relative strength of 94. That makes it in the top 6% of all shares out there. So looking pretty good. We do have a strengthening relative strength. We're currently at 94. It was 91 3 months ago and 93 6 months ago. So it's been pretty strong for basically the whole, for quite a while. All the moving averages on this are moving up. So hopefully that is a good thing. Currently, of course, we got to be extremely careful because the current market conditions, we're in a downtrend. So we want to be careful, putting our positions on and sizing our positions. This one is a full position. And what a full position means is that we take the entire value of the portfolio, we divide it by 8, and that is one full position. So just for everyone to know, that is a full position in the stock. All right. So getting back to the slides here, I did buy a position in Cheniere, and also, and this is another one that I think that you probably know of. This is the biggest home builder in the United States. It is D.R. Horton. Symbol on that is DHI. And this one, I did buy it. I did buy it right as it was exiting the, right as it was essentially exiting the buy zone here. It's basically even after hours. I bought it basically a little bit high, 106.58. Set the stop loss at the pivot, and that I set it at 99.65. This is a double bottom pattern. Part of the reason I bought it was because you can see back here, back in the April time frame, there was a high at 106.89. That's sort of where I wanted to kind of buy it as it was moving through this higher high. So basically trying to buy it at the higher high. There you go. Sort of that's, and we'll see how this one stacks up. This one has a 100% checklist. So this is definitely in favor. The residential commercial builders, for some reason, are doing well, 33 out of 197. So that's looking pretty decent. On the technicals, up about, just a little over 1% on the week, about 3.5% so far. That's 2 days. We will see how that does. Quarterly, it's up about 26%, and year to date, it's up about 53%. So hopefully, it's going to continue in sort of that, that range. I mean, if you can see, all the moving averages are up on this, and it seems to be positioning itself very, very well. Now, unfortunately, it's extended right now. It's 5% above the buy zone, the buy point. So it is a little bit extended. So, if you were to add here, you definitely could add here, but you probably want to be careful. You probably don't want to add too much above this based on this chart. So that's kind of the, that's kind of the long and short of it. That's kind of the long and short of it. So D.R. Horton definitely is one that we bought. Now, currently, I'm in 4 stocks right now. Nike, of course, that's up today. The Qs, I did resume my position in the Qqq. Let's take a look at the Qqq just real quick and see how that one stacks up. That's also in the buy zone right now, by the way, if you are interested in that. The thing about the Qs, this of course is the Nasdaq 100. I had sold it when it pulled back down, when it pulled to the, as you can see, when it pulled basically to this 40-day line. That's, I basically I started to get out of it basically when it dropped below the 21-day line, sold half position, then sold half position, and now I've come back in, and we're up today. So it probably will trend over. My first buy was at 396.49. It's currently just a little bit above that, 399. So hopefully this is the beginning of a nice little trend on the handle. We'll see. If we draw a reversal line, let's do that really quick. There we go. This is a reversal line. This just basically is to show, this is just basically to show kind of how, if it moves above this line, then it's going to be trending up. And it does look like it's getting ready, hopefully, to break out of this buy zone. But right now, you definitely can buy the Qqq. So we'll see, how it trends. But typically, what I like to do is we will see if we get a change in the condition. If we go from a market in a correction, we may go to a confirmed uptrend today or tomorrow. We haven't seen a follow. That's when a follow through day happens, and probably won't happen until way later on the week. But I do think that, at least based on my analysis, that we're starting to see a change in the direction a little bit. So that's why I'm kind of nibbling. I haven't made any large buys at all. Basically, again, I'm only holding 4 stocks: the Qqq, Nike, and then LNG, which of course is Cheniere, and also DR Horton. Now, I did close an interesting trade that I've had on pretty much since August, and I kind of wanted to show this to you. Sort of the life cycle of a trade. This was a bull put spread that I had on Domino's Pizza. Domino's Pizza. As you can, just one look at me and you know that I am no stranger to Domino's Pizza. But anyways, what happened there is, this is the recap of it. We did on an annualized basis, we did fairly well in this one. It's about a $500 gain on this one over a period of time. About a little over 100% return if you annualize it. Obviously you can't do that with everyone, but not bad. Basically, we got in initially into the trade. It was basically we had to commit $1,295 in funds, and we ended up, I think, if you can see that, about 541 profits. So not too bad. Looking for other trades like this that are long term. I haven't updated this one, but it did come up nicely into the profit zone, and I decided that now was the time. Basically now was the time to close the price. Domino's. Let's see. DPZ. Today, Domino's closed at 537, and you can see on this chart, we were right here at about 540. As you can see, we started to get our maximum. We're coming out here to December, so we're starting to get into the profit zone. I decided to close it a little bit early. I probably could have continued on here, and probably up to 1,000. But I think at 50% profit, sometimes it's a good idea to sort of cut it. So now, basically, I have a iron condor on Costco that's doing well, and I'm probably going to be coming out. I was looking at a Citicorp deal, but I probably won't do that. But be on the lookout. I should have some more nice trades on, nice options trades. So let's get into the questions. Thanks for holding here, and thank you, Kiru. Let's look at BP and see kind of if there's anything there that we can look at. All right, BP. And of course, BP changed its name. I don't know if you realize this, but many years ago it was called British Persian, but now it is, of course. It's not that anymore. It's British Petroleum, and very, very good company. One of the integrated oils. They're starting to come up a little bit. This is not a bad. Part of the reason this is so spotty here is because this is an ADR. This actually trades on the London exchange, so that's part of the reason that there's this kind of choppiness. It has definitely moved above a reversal. So I'm going to set the reversal line there. It's definitely moved above the reversal, but it's still below. And I'm just going over the technicals here. It's still below the 40-day line in a consolidation. It did make this nice bounce off of here. So we definitely have this nice trend looking good here. Now, would I buy it right now? Well, I'd be a little bit concerned. There's several issues. And right now, just because of the way the market is, it's in such a crazy thing with the market and correction. I think you have to be a little bit more selective on the shares that you buy right now, because I definitely want to see some more strength in the market. Part of the reason that I did the trade that I did was because I wanted to make sure that I wanted to make sure that there was enough strength. I wanted to make sure I had some exposure to the market, but I'm still seeing some weakness in the market right now. Here's some kind of warning signs on this one. Relative strength is 78, which isn't bad. I like to see it above 80. The checklist is 67. And one of the issues, there's several issues that I want to point out here on this stock. One of them is that it's not really being accumulated by the funds. I like to see stocks that are being accumulated. Also, the relative strength is less than 80. It's very close to that, so that really almost isn't an issue. And the earnings, unfortunately, are not in the top 20% of all earnings. So that's a little bit of concern to me. It's still a great stock. I'm not, it's just that isn't the right time to buy. Now, one thing I do kind of like here, we just came through earnings, as you can see, and this is the fundamental analysis that we're doing right now. But the sales have been going up very, very nicely. They're up 44% last quarter. We had some very nice gains in terms of profitability. So, could you buy this at this point? I think you probably could. It's above the 200-day line. I just don't want to buy anything below that 200-day line, but this is not a bad buy. But here's the thing about this one. Given the market we're in, it's a tough market to trade. But given the market that we're in, I think you got to be careful. Set your stops very, very tight. On this one, if I came into this right now, let's say tomorrow it holds up, it moves nicely, I would be setting my stop loss very tight at about 25.50. That's where I'd be setting my stop loss, right below this, right below the 200-day moving average. And the reason I would is because I think it's made a bounce off of that. It looks like it has, but who can tell? So on this one, I definitely think that this is viable. This is absolutely viable. But in this market, while we're still in this correction, be careful. Currently, this is viable, but set your stops tight at, I would say, 25.50. That's kind of the, that's kind of where I see it. That's kind of where I see it. And about 25.50 is where I would set my stops. I know that's a little bit tighter than normal, but I think it's definitely a good stock. It's definitely worth the buying, and the oil gas integrates have moved up. I think that they will benefit. This is one of the few stocks that probably will benefit significantly from inflation, and we're going to get a lot more inflation. So I think this is good. I think this is a very good one, and I think you picked a winner. I would just be careful, set your stop losses tight, but I think it's a good stock. I really do. I think you picked a really good stock. Let's look at Starbucks SBUX, another place that I have frequented a lot. Starbucks coffee. Thanks for this, Paulie. It's really tough because there was so much damage. We're finally now starting to see some of the we're starting to see stuff come up above the 200-day line. This is a really key thing for me. There we go. And this is the reversal line. So this is just reverse. So this is potentially, actionable if it can hold above this level. That's the key. One of the things is this is in a consolidation pattern, which is very good. We came down and we tested at 104. That's the the test back on the end of October. November we had a downward trend, and I think we've reversed trend. You always want to try to buy as it's reversing higher, but right now this is a relatively weak reversal, even though we have a nice, it went up $2 a share. So as long as the market, and this is the real rub here, as long as the market stays good, this one probably will do well into the holidays. I would think that this might be a good candidate for a potential for a bull call spread, because it's making this move. But I'm still still early. I still want to see if it can hold this level. If it can, I think it's going to move up, very convincingly to about 126. Currently, it's so it has about a 10 to run. So it's looking fairly good. It's got a stronger, it's got this relatively strong checklist, 78. The relative strength is a concern. The relative strength here is only 68. Typically, I want to see it above 80 on that, but this is pulled below the 200-day line, and it's now moving up. The reason the 200-day line is such a big deal here is that the 200-day line says, are there funds from the investment funds flowing into this issue, or are they flowing out? And if you cross below the 200-day moving average, that typically indicates that there's funds, institutional funds, that are flowing out of the issue. That has been sort of the issue since about the end of September. It seems now we're moving above that 200-day line. That's a good place to buy it as it moves above the 200-day line. So again, I like this one as well, Paulie. I think it's good. I would be a little bit careful. I would size my position a little bit more conservatively, maybe a half a position here if you wanted to get your toe wet. So here's what I would say on that one. I think it's a good stock. I think, it could be a little stronger, but, given the market weakness, this is not a bad one. So I would say, buyable, but only start with a half position. So that's kind of the thing. That's really one of the things that I'm sort of passionate on here, is that it's position sizing. It's the reason I go into so much detail on that is because if you do the position sizing correctly, it will eliminate. If you do two things when you get into a stock, if you get in at a reversal or off of a base pattern, and you do a correct entry, and then you size your position properly, that's gonna put you way ahead in terms of being successful potentially in the trade. So I like the stock, of course. I like where it's at. I like the fact that it's moving above the 200-day line. So I definitely think you could definitely position yourself with this. But I wouldn't go in with all the guns. I would be a little bit careful. Don't go in with all your guns, but a half position here might really work. So a half position typically is going to be about 6.25% of the overall value of your portfolio. That basically what it is if you take your entire value of your portfolio, divide it by 8, that's going to give you about 12.5%. It's half of that number. So whatever that in dollar terms translates into shares, that's probably a good number to start with. Also, if you do do a buy, make sure you set your stop loss. I would be setting my stop loss basically right at about the 200-day moving average, and that is basically at 113.34, about 113.30. That would be a good place to set your stop loss. It's a pretty tight stop loss, about 2.5%. So that if you're wrong, if it doesn't convert to a trend up your maximum, you're capping your losses at about 2%, which if you use a half position, that's going to be about 1/4% potential on your hit on the value of your portfolio. So I know I'm going into a lot of detail here, but I think it's a good stock. I think at 2.5, at a half position, I think that would work quite well. All right, so let's see about questions from TikTok. Thank you everybody for holding so much. I so appreciate it. All right, let's see. Thoughts on Nvidia. This is a good one because the chips are a leading sector, obviously, and of course this is fabless. This is the fabless. This is the fabless sector, and so let's bring up Nvidia, one of my favorite stocks. Unfortunately, I'm not in it. I did sell it into strength. I'm also looking for possible reentry into this because it is looking pretty darn good. It is looking pretty darn good. But we're still, unfortunately, the market is still in this this crazy correction. So this is we got to be super careful here, is because look at yesterday, it pulled all the way down. So this is a volatile stock. I like the fact that it's above that 200-day line. If it can hold above the 10-day line here, this is a possibly place you can get back in. It's not the best entry point because it's not in a base pattern. It's a consolidation or a couples handle. But as a reversal, and that would be kind of as a reversal, I think that might be a place that you can get in. So let's kind of look at some of the statistics here. This is one of the best stocks right now in the market. It's got 100% checklist on this. So it's very strong, and it's moving after hours too. So there's a lot of very, very good numbers here. It's up in 32 days. It's up 41% from the pivot. So that is very, very strong. I also believe that this is also a potential candidate for a bull call spread. I think this one is, because I do think that we are going to see, it looks like it's retaken the 10-day line, so it's looking quite good on it. Let's see if there's any unusual options activity. Yeah, there's a fair amount. Basically, the December 21st 322.50s, which is basically right below where it closed, and the 325. So that's not surprising that those options would be the ones. It's up 7.2% today. That's incredible. But on the month, it's actually down just a tad, almost 2%. So year to date, this has been a spectacular performer. And I need to eat my own dog food because, I've known about this stock. I've been in this stock. I'm always selling too early. I'm a sort of a swing trading guy, but this is up 137% for the year. So this is a tremendous gainer, and it's up 54% for the quarter. That's basically from when it came out of the base. That's why buying out of the basis is so good, because when you do that, when you do it right, when you buy out of the base correctly, it can be a tremendous thing, because this is basically where this dotted green line is. This is where the base starts. This is a month. It's up 54%. So basically it did about 30% of all of its gain in the year. Actually a little bit more than that. And so it's about 35% of all the gain in the year is in one quarter. And it's coming out of that base pattern. So that always shows you, buying as it moves out of a base pattern, that's an optimal place to buy. Could you buy it here? Yes, I think that this one might be a good candidate for a bull call spread. And what the bull call spread is basically you're buying two options in a spread, and so you're limiting your downside risk, but you also can multiply your upside risk. So this is potentially a good buy. You definitely this is buyable now as a reversal, but I would be careful. Again, because the market, it still hasn't really, it's still a little bit it's still a bit difficult. So um, you know uh, you know this is buyable, but set your stops. So that's really all. That's really all I'm saying is that this is viable right now. Um, you know, so but you want to set your stops pretty tight. If I were to buy this one now, and I'm not in this one, but I may be, either with a probably with a spread on this one. Uh, so basically, you want to set your stop about 306. It's at 324 right now. If you were to buy this one, but it's retaken that 10-day line. That's very good. That's very good action, and so I definitely think you could buy this one at this point. Uh, Nvidia, of course, is the name. All right, Magnolia. Oh, interesting. We have let's do Magnolia. Let's do the oils first for Mary. Thank you very much. Magnolia. What is the symbol for Magnolia? Let me go. Let me just go into the E and P's here. Let me just go into the list here and bring up Magnolia. Thank you for watching, Mary, very much. I always appreciate you your comments. Really do. Um, let's see. Okay, so let's look at. I just want to kind of see where the E&P is in the rankings right now. Let's go down here, and we're looking. What we're looking for here is the energy E&P. That's exploration and production. I think it's around about 22 or so. It's fallen somewhat. Yeah, there we go. Here we go. So basically, this group it was 28 last week. It was 46 basically 3 months ago, and 6 months ago it was two. So it seems to be kind of it's in favor, but it's kind of been jumping around in terms of are people investing in it. So we're looking essentially for the Magnolia Oil Company. Let's take a look, and I believe in this group, yeah, there we go. The Magnolia Company. It's about a mid-size. The big ones, of course, are EOG, Pioneer, Devon, and Diamondback, and then they get kind of smaller with Continental Resources and so forth. This is down here. It's about it's about the 12th largest in this group. So let's take a look at the chart to see kind of what was happening. Boy, it just you look at these charts. Hindsight's 2020. Hindsight is 2020 in looking at charts. It's just so amazing. But this is why buying out of a base pattern is such a great thing to do if you can do it properly. Because what happens, of course, is that look at the gains since it went out to its base period. When it moved out of the base period, it was in September. You can see it's just moved up, and now it round tripped it, and then it came right down, and then it got support. So this is definitely reversed, and it's reversed higher. This is the reversal line here. So we're definitely above that. So that's a very good thing. We're above that reversal line. So this is a potential place that you could also, if this holds it, this is also a potential place that you could get into. You could come back in. You could come back into. Um, you could come back into the stock. Let's take a look. 98 relative strength. I love those high relative strength. Very good checklist. 89. I'm really liking that. The industry, with all the inflation that's going on, this is probably going to be good. And this is a good little company. Let's kind of look at the technicals. It's up 7% today. Wow, that's really good. 15% on the week, and on the month it's up 11. So it's starting to make that turn, definitely. Quarterly 18%, and year to date this is spectacular 171. And it looks like it's up after hours about 8 cents. So RS rating is 97. I love buying above 95 relative strength. That's always what you're looking for. Now, let's take a look at the fundamentals. And basically, I was doing technical analysis here, and I'm going to do some fundamental analysis. Let's take a look at the fundamentals. And this is really the sales. This is kind of what you're taught in business school. And this is sort of my 5-minute business school here, condensed into 5 seconds. Okay, basically, we're looking for the change in sales. Look at that. Very nice. They're nice changes in sales. Typically, what we want to see in a fundamentally is a company that has a 20% or better quarter-over-quarter sales numbers. Now, in the first quarter, that wasn't the case, but definitely it's been the case for the last 2 quarters. And look at the amount of profit that they're generating. So this whole sector is doing well, and it's probably going to continue to do well, even though the price of crude has come down slightly. A lot of you're starting to see more and more funds jump into this one. 486 funds are in this. 77% of this is held by funds. So this is a really good thing. I mean, when this gets over about 50%, that means that you're kind of swimming along with the big boys, because 77% funds, that's only going to be about 23% are actual retail investors, 77% are funds. So that's really strong cash flow, relatively cheap price, per share. So this is looking on a fundamental basis. This is looking really good. The fundamentals are basically your medium term radar. They're kind of looking out, a quarter or two to see if there's any ships that you're going to run into on the horizon. And this one looks like it's got clear sailing. So very, very much like it. Very, very much like this one, Mary. Thank you for bringing it up. I've actually wrote it down on my list, because that's part of what the fun of doing this little show is that I can find out kind of from your thoughts, which ones that I like, that you like too. So I think this is viable, and I think it's viable basically right now. I think it's viable right now. Okay. Now, would I get a big position in this one? Well, we're still in this correction. We have to be kind of really careful about. We really have to be careful about getting in too heavy too quickly. But I like this one. Mary. I like it a lot, and I think I definitely think it's worth people's consideration. So Magnolia Oil and Gas, symbol MGY. Very nice. Very, very good. Thank you very much for that. Let's look at Virgin Galactic. Of course, the symbol on Virgin is SPCE. Now, I have not been in this one for a while. This is really very much of a speculative stock. It doesn't really have a chart that I really like. I'll be honest with you. The downward trend on this kind of scares the bejesus out of me. This is the 200-day moving average. We're well below that 200-day moving average. So right now, based on this chart, the funds are flowing out of space. So the money is flowing out of space. And let's take a look at some of the fundamental analysis here. We've got the fundamental page opened up. So let me do this for Harris really quickly. Basically, let's see if, and this one is not viable right now. So I want to kind of get that out of the way. I don't think this one is viable, and here's why. We have essentially no sales. Okay, so we've taken deposits, but we don't have any sales. We have losses. So if this stock really depends on, what the news is, and now with Blue Origin and some of the other things. I mean, I wouldn't say that it's lost its mojo, but it isn't quite as special as it was last year. I want to kind of point that out. This has a relative strength of 5. It's below the 200-day line. So I just, as much as I like Richard Branson, I think he's a fantastic promoter. As much as I like him, I just think that you got to be discerning here. So, SPC is not viable. So that's kind of my take. So it really isn't viable, because relative strength of 5, just always it's just not looking. It's not looking that good. The checklist is 44. Again, I like to see at least 67%. Just it's off of its high. So right now, until there's other news, I would just watch this one. You can't really. You're not going to be able to do as much with this one, unfortunately. Jim, where do you think the market is heading? Well, gosh, I I thought I knew yesterday, boy, I tell you, but it was it was a crazy day today because I thought we would get more damage, but it looks as if we may have a bounce. Now we're still market in correction, so if the rule of thumb is if the market is in correction, you want to be 100% in cash. I am not 100% in cash. I will be honest with you. I started buying stuff today. On Friday, I was basically 100% in cash, with the exception of some option positions that I had and my position in Nike. I'd sold everything else. Starting on Monday, I didn't do anything, but I've started to come into the market. I only have really three things besides the Nike position. The Nike position. The Qqq, of course, that's the Nasdaq 100 ETF. I also have this from LNG, which is this liquefied natural gas play. I don't have any techs yet. I sold all my techs into strength, and then but as if we move from the downtrend here, if we move from the market in correction to a confirmed uptrend again, I will be buying techs again. Absolutely. But right now, I am tech light. The only real tech exposure I have is through the QQQ, because I am a little bit, I'm trying to figure out where the leadership is, and that's hard. That's hard. Now there is some leadership in the chips, and Nvidia, AMD. Unfortunately, they're not in the proper base patterns, but hopefully I will get back in again. So, thank you for that question. Thanks, Hans, very, very much. Thoughts on Apple? By the way, and this is really fascinating, and I want to show you this because I just realized this. Apple is at an all-time high, and that is amazing. That is absolutely amazing, and it's up after hours. So I think that there might be, who knows? I mean, we can't, we can't really say, but Apple may be, it may be starting its move. I mean, because it's up after hours, so it's probably going to pull back a little bit. But if we go all the way out here, if we go all the way to the monthly chart, I want to show you this. This is fascinating. This is the chart of Apple really since its inception. It's actually, it's way back beyond that. I mean, we don't have enough, but look at this. Right now, Apple is at an all-time high. So, this is not a bad place to buy it. I mean, it's got a nice trend here. This is the monthly chart, by the way. Relative strength is 91. Now, would I buy it at this level? Well, it is extended. I'll be honest with you. It's extended. That is extended. The correct buy point is basically, the pivot plus 5%. So it's really buy, the correct buy point is up to 160. And now it's all this high. So I do think we're going to probably see a pullback. But if this gets within 5% of the 10-day line, I think I could put that on there. Hopefully I can see that. Yeah. Then we might be able to buy it. I wouldn't buy it right now. It is extended, but it's almost 5% above the 10-day moving average. I think it's going to pull back tomorrow. But if it moves about 2 to 3% above that 10-day moving average, that might be a great place to get in. It is terrific stock. I would not buy it right now. It is extended, but not a lot. It is extended, not a lot. So I wouldn't buy it. Just go out and buy it. What I would do here is, oops, that's PayPal. What I would be doing here is, Apple is extended. So wait for a pullback. Yeah, so I wouldn't just go out and buy it. I would wait see if it pulls back to the 10-day line, and then you could possibly add to this. It's just a little bit too far above. It's a little bit extended. So I do think we're going to see a pullback. Here's what I think is probably going to happen. I mean, who knows? I do think it's going to pull back to about 164. You might want to consider buying it if it pulls back to about 164. I don't know if it will. This may just be going up because of what I'm seeing here. There's a lot of money flowing into this issue. There's a lot of money flowing into this issue right now, and I think it's doing it because of safety. A lot of the funds are going to have to make their money towards the end of the year. So this might be really, really good. So I definitely, it's definitely buyable. I just don't want to buy it this far extended. I don't want to buy that far extended because that can be very difficult. Do you think Google will surpass 3K? Who knows? Who knows? Probably because there's a lot. Fortunately, unfortunately, there's just a lot of people that are seeking safety. That's a safe harbor in the market. Thank you, Samuel, for the IWM. This is an interesting ETF. This covers the Russell 2000, which are, it's sort of like the Fortune 500 times 4, I suppose. This one looks as if it may have bounced, and that's interesting because it's pulled back to the it's pulled back to the 200-day moving average. It looks like it pulled back below that, then it got some support, then it's moving up. Still, it's below that 40-day line. The question is, can you buy it here? Well, this is a pattern, but really, the way you want to buy this is as a reversal. And I don't know if you can do that. I'm putting a reversal line on the handle, and that's kind of showing it. So can you buy it here? I would be a little bit cautious about buying this one right now. But it does look like it is reversing. I just think that there's better. I think that there's better index funds right now than the Russell. The problem with the Russell is the way this market has been trading this year is that the majority of the strength this year has been from some of the mega caps, and so you don't capture as many of those with the IWN. With the QQQ, on the other hand, you basically wait to. I think this is a better. What I'm trying to say is I think that the pattern on the QQQ is a better pattern. Right now, the QQQ is in a buy zone, and of course, this is one of the world's largest ETFs, and it covers the 100 largest companies on the Nasdaq, weighted by market cap. So it's got Apple in it, it's got Google in it. And, if you can't buy, 100 shares of Google, and I mean, who can? I mean, that's like $300,000. This is a good way to get exposure in your portfolio because it has all of those things in it. So this is how I would kind of the reason I think this one might be a good one is it came down, and this is kind of this. I sold out of it as it moved in, but as it tested the 40-day line, it looks like it's got a solid bounce off the 40-day. Now we're probably going to see it pull back a little bit tomorrow, but this is a good action on the QQQ. So if you're looking for an index fund to get exposure, to get exposure, that's not a bad idea. All in. Well, you definitely could go all in. I think, I hopefully think that this is a reversal, and this is great time this can be great times to get in, but be careful because we're still in a correction, and I just it's so easy to get burned. It's so easy. I'm trying to put I'm trying to restrain myself from just jumping into, but I totally agree with your analysis. You think today is the head count balance? Thoughts on Crowd and Net? Okay, let's look at CrowdStrike. I haven't been in CrowdStrike really for a few months. It's it has not been the leader in the space, and I want to show you this chart. It kind of and this is what happens a lot of times, even with the greatest of stocks. You'll get these base patterns like this, which it did. Basically, it comes up to a certain point, and then it starts consolidating, and then and then it tries to break above the buy point, which is 289. Well, that's what happened back here in about the third week of October. And what happened was it couldn't get through it. So you see it bounced up and then down, down, down. It's got a relative strength of 30. The earnings were very good. So fundamentally, CrowdStrike Holdings fundamentally is really great. Look at this. It's got, over 20% growth per year. And look at their profits. They're really strong. But why is it doing this? Why is it going down when everything is so strong fundamentally? Well, the problem in tech, and especially in an area like this, is that stocks tend to get ahead of themselves. I do think that this may take a while. This may take a basing pattern. It may have to consolidate for a few more months before it's ready to go higher. It's definitely going to go higher. CrowdStrike is definitely going to go higher, in my opinion. The problem with right now, though, is it got ahead of itself. It's below the 200-day line, so it's really not buyable. I don't think we can really buy CrowdStrike at this level. I do like this area. This computer software area is a very, very strong area of the market. Let's kind of look to see what are the other, what are the other stocks, excuse me, that are in this group. And that's the, that's 23. So this is the software security group, very, very strong group. And it did bounce as a group off of that 200-day line. The question is there an opportunity, and what are the best stocks? So I really like this area. So let's look and see what are the best stocks that we can find. Is that, yeah, no, this is software security. So I gave you the wrong one. So let's take a look, make sure that I've got this right. Okay, so we want, I thought it was computer software database, computer software enterprise, especially networking, finance. Wow, we've got so many here. Computer software desktop. Oh, gosh. Well, I want to get, let's get to Fortinet because this, I don't know if that will tell us the group. I can't remember the group number. FTNT is probably the leading stock here. It's number 23 on the list. So go back over here to group number 23. Okay, there we go. So of the stocks that are in this group, and it seems like it's in especially enterprise, team is number one. But the question is, what are the top stocks? Well, interesting. None of them. HubSpot, I know. Descartes Systems, and Atlassian. Atlassian is an all-time favorite of mine, but it's not been looking as good as it used to. Let's see. Yeah, I think it's reverse, but it still almost came all the way down. So here's what I think about the CrowdStrike. I don't think it's ready to go yet. Now with net, with Cloudflare, the same kind of issues, unfortunately, with Cloudflare as we had with CrowdStrike. So, great company, but again, a little bit ahead of itself, needs to base. So I wouldn't recommend either of these two. There's just better stocks out there right now. If you want to be in the technology space right now, the action, from what I can see, is in the semiconductor fabless. And semiconductor fabless is the number one area right now. And I want to show you this one because this is where I'm going to be putting on. Positions probably tomorrow, as is in the semiconductor fabless. It's 99 relative strength. This is where the money's moving. AMD, Nvidia, Monolithic, all these ones in here are very good. Marvell, we saw really good action on. Rambus. Rambus is one of my favorite stocks. RMBS. I did sell this one. I did take profits on this, but I'm looking possibly to get back in. Let's kind of look at Rambus here. Yeah, look at that, boy. I always sell too early. Look at that. It moved up beautifully. I sold, as you can see, I sold here. I bought here, sold there. I needed to come down a little bit more. I needed to come down a little. This is where you ought to be looking for opportunities. Of course, we talked about Nvidia. This is going to be where, yeah. So Nvidia, this is set up a little better. It's not at a buy point, but this is a little bit better setup. There's a little bit better setup on Nvidia. I probably wouldn't buy that one either. I want to see a base pattern. It's tough to find a base pattern on the semiconductor fabless because they've been doing, up until very recently, very, very well. So let's just see. I think the one that probably is going to be the best bet, is probably going to be AMD. My guess is in this group, this is the number one group. This is probably the one that you want to buy is AMD if you don't already have exposure to it. Now, this is not the best pattern, but it is pulled back to the 21-day line. It looks like it's getting strength there. As you can see, I've bought and sold this several times. This is very volatile, AMD, but I think it's worth your time. I think you could pick up some change on it. Even though we are not in a confirmed uptrend right now. So we don't want to go all in on this one. But even though we're not in a confirmed uptrend, AMD, I'm going to probably look at possibly doing something on AMD tomorrow. I will be buying the shares on that one, probably. I can't say. I'll probably be looking to do a bull call spread on Nvidia, but I probably will buy the shares of AMD. It just has to do really with the price of the underlying security. So that's pretty good. All right. Hi, Jim. Are we totally out of the woods? I wish I could say yes, but unfortunately, I have to say no. No, we are not. No, we are not out of the woods yet. Oh, gosh. Unfortunately, we are not out of the woods on this one. We are still in the woods. We're in the deep woods, but we're still not out of the woods. No, I wish we were. I'm waiting for a fall through day. Believe me, when the fall through day happens, everybody is going to get that on that's on the action trade alert. So you'll get it all. Let's look at GM. I did sell out a Ford right on Friday. I did take profits on this. So I've been in this group. I've obviously I was a Tesla too. I sold that as well. I took profits there. This is looking fairly good. I mean, it's got this bounce off the 40-day line. The question is there better merchandise out there? Let's see. I kind of want to see. This is a really strong category, but really, if you look at it, this is a number 4 category. But the question is, which is? Oh, I'm sorry. Now, let me show you. Let me show you an area that does have a lot of strength, and I definitely want to show you this one. This is the trucking. Old Dominion, JB Hunt. These are all potentially good. That's a little extended. So this is an area that you might want to look at exposure as well. But with GM, I would probably be a little bit careful. And then we have Palo Alto Networks, which was the leader in the security software space for so long. As of late, it just it keeps on moving nicely up. So I mean, you can't really complain, but I just don't think it's the best in the group. I think there's other ones. That are better. So let's look at this group. This is the Computer Software Security Group, and take a look to see which of the top stocks. Well, that's interesting. Tyler Technologies, some of the ones I have never heard of. So I just don't know. This is supposed to be. Well, it's supposed to be. I have the wrong category. So Palo Alto Networks, I would say probably avoid it for right now. I mean, it's a good stock, but and it seems like it's tested at 40. So I don't know. You could probably get back into this one. I take that back. I mean, it's extended. It's extended here, but it's strong. I mean, 95 relative strength is very, very good. 67 checklist, that's minimum, so that's okay. Yeah, it's not bad. It's not bad at all. Well, I'm almost out of time. I've almost run an hour here. So, good question. Thank you. When do you choose between a bull put spread and a bull call spread? Well, that's a really good question. That's a really good question. It just depends. What I do, I typically will run both of those to see. I like the bull put spreads typically because they're credit spreads, and they put money into your pocket when you're doing them. And the bull call spreads, generally speaking, are debit spreads. So I do like that. Now, one of the things about the put spreads, of course, is that you have to be able to you can get exercised on a put spread. The call spread, you can walk away from it if you want to. But if you do the spread properly, you're going to be protected because you're going to have both sides. So I typically prefer bull put spreads, and the reason I do, if I can do them, if the number's working out, and I try to run both sides, is because instead of they are limited typically in terms of their potential, but they put money into your pocket. So I do like giving me money up front, and then I can give it back later. I do like that. I do kind of like that option. So I typically prefer bull put spreads. All right. Well, thank you for that. That's a great question, by the way. It's a great question. Boy, I don't think we get to everybody's question here. That's. Another good question. How far out do you buy your contracts? Well, typically here's the thing, especially if I'm buying calls, I don't really like to buy calls all that much. I like to sell calls. I typically, if I'm selling calls, I want to be close in. I want to be typically 45 days or less. If I'm buying them, I want to be out 45 days or more. And the reason is because of what they call theta decay. Theta decay is the time decay on your options. So if I'm in a selling position, I definitely want to be relatively short. I want to be like 45 days or less. If I, on the other hand, am buying, I want time for my spreads to work, and that typically is 45 days or more. So that's kind of how I go. I typically also prefer monthly options. And the reason is liquidity. There are some very good weekly options, and I do them all the time, but they're not as liquid as the monthly options. So I typically prefer monthly options because it makes it easier to get out of position. So that's another really great comment. All right, everybody. Well, I have come to an hour, and thank you so much. Everything was kind of working today, which is a change for the better. I do need your help, and the help really is, if you're watching this on YouTube, I would really appreciate it, of course, if you please like the show, because that helps to get it out to a lot more people. Also, consider becoming a member of the Action Trailer. It's very easy to do. All you have to do is go to, and it's free. This, by the way, is free. We do have a Discord room that is a paid service, but we have some great traders in there, and I try to analyze all the trades I can during the day. That's another great service. But if you just want to get on the free Action Trade Alerts, just go to www.dallastradingfloor. Well, I will be back tomorrow at the same time, hopefully at about 3:45 or so. Hopefully, I'll be back then, and we'll be able to cover some more stocks. Right now, you still want to stay more in cash. We're still in a we have to wait to see what's going to happen tomorrow, but hopefully we're going to be coming out of this market correction. We're still in a market correction, so you got to be super careful. This could just reverse and move lower, but there may be some very good buying opportunities towards the end of the year. We really have to wait for the fall through day, but I'm starting to stick my toe in the water. And I do think that, we're possibly going to move higher. There's just so much liquidity in the market right now. There's so many stocks that have to, there's so much capital that has to find a home. We may be able to profit. This typically December, January, these are two very, very good months in the market typically. So we probably want to be more invested. The reason, of course, we weren't invested was because we had a signal, and the signal was, of course, the market was in correction. It was pulling back hard. So I think it looks like it's stabilized. Hopefully it has. If it has, then we want to start moving more capital, getting more exposure. So I will be back tomorrow at hopefully about 3:30 Central Time. Thanks everybody for watching. Please tell your friends. Please tell your friends and subscribe. And also subscribe to the free action trailers as well. I'll see you tomorrow.